Success is achieved and maintained by those who try and keep trying. W. Clement Stone. And my friends, every day you can move toward achieving success by trying and keep trying. How do you do that? 10 to 15 minutes a day. That is all we ask. Thank you, Patreon supporters, for all your help, and book purchasers. Let's jump into these charts. They are interesting, and I am excited. And you might say, Tom, why are you excited? These charts are sliding sideways, and it looks like the market could go either way. Yes, that's what's so exciting. And all these prognosticators, hey, the market can do one of two things. Actually, three. It can go up, down, or sideways. We see it going sideways right now. What does that mean? That means the market is setting up for something. And the nice thing about being trend followers is we will wait and see what the market tells us. You'll see more as we go through the charts today. Let's jump first into the S&P 500. On the weekly chart, look at what we have happening. Now, we had a crossover going down, and then what did it do? It turned right around and went up. And then what did it do? After a very weak crossover, we have a week that's very weak. I'm using those words a little confusingly, but I'll delve into it a little more. What do we see happening this week? We see a red open box spinning top. That is a slowdown in the up movement. By spinning top, we mean that's what it looks like on the Heikin-Ashi candlesticks. Got a wick on the top, a wick on the bottom, and an open box. Open box red always means a slowdown in the up movement. Solid green, when you see that, there we go. It means a slowdown in the down movement. Many times it shows you a change in trend when you see that happening. So is that what that's showing us? Are things going to roll over and go down? Price percent oscillator is almost laminated on that red signal line. We ended the day up 0.29% for Friday, but the market was all over the place this week. Look at the 2-day chart. Now, this is just the first day of the latest 2-day candle. It's a green doji, means tons of indecision. Look at that price percent oscillator. That is our main indicator. It is a lagging indicator. The derivative oscillator, which are the light red and green rectangular boxes, for lack of a better term, those are actually leading indicators. So the derivative oscillator, leading indicator, price percent oscillator, lagging indicator, but the most accurate over time is our price percent oscillator. It's about flat. Derivative oscillator still positive. So again, what do we see here over the last 7 days now? A sideways slide tending down but not crossing over. So again, tons of indecision. The market trying to figure out which way to go. Weekly still in a confirmed up move. So is the 2-day, but very, very, very weak. Is it going to fly up or crash? Well, the nice thing about what we do is we're going to wait and let the market tell us. That's what's so brilliant about trend following. Those who've been with us a long time, you know how accurate over time these weekly vertical crossovers are. They tell us what to do. Look at the half-day chart. Again, it's been tracking sideways and down and sort of started to bottom around Thursday morning, moving up a little bit, but again, the derivative oscillator still negative, price percent oscillator still negative. So it's not crossed over going up. Now, if we see this zoom up next week and then that price movement continue up, that would give us the potential of jumping into a strong up move. However, if things weaken considerably and that 2-day crosses over going down, the weekly's probably not far behind and the market goes into a crash. What's going to happen? My friends, this could drag on through the beginning of November. Why? We have an incredibly close presidential election with two diametrically opposed candidates. One may be very good for the market, another may be very bad for the market, but who knows which is which? Why? Because you can't guess how the market is going to respond to these things until it happens. Sort of like prophecy in the Bible. You don't know until the events have occurred and you can look back in time and say, oh yeah, that's why we trend follow. You cannot guess what the future is going to be. So you use historical movements and you use what's going on and big crosses and big trend changes. It's like I tell everybody, I like to surf. And when I'm out in the ocean, after you've surfed long enough, you can tell the waves you can catch almost always and those you can't. Occasionally they'll fool you, but when you see the waves starting to crest and peak and you paddle into it, get your speed up to it, and get on the board at the right time, you can ride the wave. That's what trend following is all about. It's simple, just like the concept of surfing is simple, but to learn to surf takes time, takes skills that you build over time. Same here, nothing complicated about it, but it takes time to understand it. You can understand it intellectually right from the start, but it's only when you practice it and put it to use. And those of you who've mastered things in sports, you understand that. This is what it's about. Now, let's jump into the Qs. What do we see there? Qs are still negative. In fact, price percent oscillator, this is the NASDAQ 100 for those of you who are new. That's what the Qs is. We see that the price percent oscillator is slowly pulling away from the red signal line, derivative oscillator losing downward momentum, red spinning top, a slowdown in the up movement, indecision. Look at that 2-day chart, trying to cross over, going down. Now it hit lows back on the Wednesday, Thursday that it's not hit yet on Friday. This candle will finish drawing Monday afternoon. What if there's a big down day on Monday? It would be what we call a 2-day recross going down. Might give you a jumping in point for a potential down move. Now, again, as crazy as this market is, you would have to make sure to set your loss limits and go by those very carefully, and also set your profit margins. In fact, I'm going to put at the end of today's training today something you're going to find very helpful. I haven't sent it out in a while. It's going to be at the end of today's video. The secret of profit and loss bands, how to use them. Check out the end of the video today. Now, that's what we see happening on the 2-day, trying to cross over. Watch it on Monday for a jumping in point around 3:50 p.m. What do we see go? And again, that's for a practice trade. We're not a stock calling service. We're an education firm. Want you to educate yourself. What do we see going on the half-day chart? It's gone down, gone down, gone down, and it looks like it's sliding sideways, maybe tending up with those 2 green dojis, maybe not. It hadn't pushed through the half-day trend line, so keep your eye on that also. So what do you see when you look at these charts? Lots of indecision. So you let the charts lead you. You don't guess and throw your money away in your practice trade, and by that I mean your virtual dollars. What do? You let the charts lead you. You let the signals, which are primarily that price percent oscillator, tell you what to do. And by the way, I have a great training for you today. If you're a subscriber, using indicators to interpret crowd sentiment. That's exactly what we're talking about. You need that training. Look in your show notes. If you're not getting those show notes, it means you're not a subscriber. Go to chartingwealth.com, sign up for free. Let's now go to bonds. What do we see there? Strong down week in bonds. Look at that price percent oscillator ticking over, derivative oscillator gaining downward momentum. 2-day chart. We see that it is hitting a lower low already as far as and again, this is the price percent. This is not the price percent oscillator. This is the Heiken Ashi candlestick. Now let's just make sure. What was the low on the prior? 156.97. What was the low on Friday? 156.75. Yes, it did hit a lower low. Now, it didn't end that way. It ended up 0.61%. But it's important to see where things are moving to. We see the price percent oscillator slowing down in its down angle a little bit on the first day of this latest 2-day candle, but we'll pay close attention to that derivative oscillator gaining downward momentum and look at what's happening on the half-day chart. Down movement in the morning, that's where we hit that low, and then moving up some in the afternoon, piercing the half-day trend line. So pay close attention. If you jumped into that half-day recross back on the 20th, pay close attention, very, very close attention as to what happens on Monday. Don't let this thing bound up and take away all of your profits. So pay attention. Now remember, Also look heartily at what's going on that weekly and 2-day charts. That's where we are on bonds. Lastly, we go to gold, down 0.11%. Look at how long gold has been sliding sideways. Remember when all the gold bugs were saying that gold was going to go up? It was going to go up to $15,000 an ounce. Well, about the time you hear most of that, that's usually when gold starts falling off for a while. Not saying that it's not going to do that. I hope it does, and I want to ride it up. But what do we see happening right now? We saw gold really drop off and then slide sideways. Again, it's trying to edge up a little bit, but not doing very well at that. That price percent oscillator, let's go back to the weekly chart. That price percent oscillator, you can see how it's trying to move up. The price percent oscillator, though, even if you look at price on the Heikin Ashi candlesticks, it just won't move up, will it? It just keeps going down. Derivative oscillator losing a little bit of downward momentum, but look at that. Just lots of indecision, sliding sideways. 2-day chart, price percent oscillator sliding sideways. Latest candle forming is a down candle, but again, you know, it's just hard, just not wanting to do much of anything. We look at the half-day chart and we see where it crossed over going down in the morning and then sort of pulled back a little bit, didn't plumb the lows in the afternoon. Still down for the day, 0.19%. I know some of you are waiting for that half-day crossover, but again, we caution you on those unless you backtracked and seen how accurate those can be, and unless you set your loss limits properly. And again, take that training. If you're a subscriber, if you're not, go to chartingwealth.com, sign up for free. Otherwise, you're missing out on all the daily trainings, plus the free PDFs of your daily market, weekly market, and trade worksheets. That is where we are, my friends, as we end the day on Friday. It is going to be exciting over the next few weeks and months as we watch what happens in these markets. You can chart these markets. It just takes daily practice, 10 to 15 minutes. We're here for you. Buy our book, Charting Your Way to Wealth. I have an autographed copy waiting to send out to you. Follow the link in the show notes. Don't forget, sign up so you get everything. God bless. All the best from the whole team at Charting Wealth World Headquarters.